I hear from founders quite a lot that they feel maybe sometimes that they're building two businesses, one for their customers and one for their investment board. How do you, when you're setting up Belief, like how are you intentional about breaking that?
I think that if you look at venture and sort of how it's evolved over the last 6 to 7 years or past decade, is you've seen an institutionalization of the asset class. You've seen, large funds get larger, IRRs in general decrease, returns decreasing. The average venture fund is actually not a good investment. It's not a good asset class if you pick a random fund to invest in. All the returns are sort of concentrated in a few companies and hence in a few funds. And so at the time when I set up Belief, it was really this main insight that founders really craved someone they could trust. And so the institutionals were, the big funds that you want to have on the cap table. They give you capital, they give you power, they give you trust. But also, most of these founders were acting quite performatively. So it's an incentive alignment issue, meaning if you have A16Z or any of the large funds on the cap table, you want them to follow on for your next round. You want the signaling for your company, for your shareholders, for your customers. And so are you going to ask the stupid question or be super vulnerable or, all of the bad news sense check some things that you're thinking about? Probably not. Because again, you want in 6 months when you raise your next round for them to double down because that gives the signaling to the market. And hence there is this opportunity, and you've started to see the best founders sort of shape their cap tables into two different ways where they had the institutional and sort of this peer VC. The person who they can trust, who they can ask the stupid questions to, but who also follows them from inception all the way to IPO in a quite concentrated fashion. And so again, you've started to see this in the US, right? Where Travis at the time with Uber picked Bill Gurley at Benchmark to be the institutional, Chris Sacca at Lower Carbon to be sort of this peer VC, right? Sam with OpenAI recently as well, right? Picked Vinod at Costa Ventures to be the institutional. And then, at the time, Josh Kushner at Thrive to be this peer VC. Now Josh Kushner at Thrive is himself an institutional. But you keep on seeing that there is this opportunity essentially to be sort of this partner who is more aligned with founders and also where incentives are aligned. So a lot of the large funds, multi-stage funds, see pre-seed and seed stage investing as an option call to do the next round, right? They write 0.1% of the fund into a company and it's just an incentive alignment issue. And so they treat founders like a number, not because they want to, but just because it's an incentive alignment issue. So there's this opportunity to essentially be a very concentrated product and very focused product where incentives are very much aligned. And that was really the mission with Belief, is be the first spark of belief into young founders who are building towards this future of abundance.
You mentioned young founders that are great technically, but maybe aren't the best managers.
I think the future is going to be built by quote unquote younger founders. The main comparison I always like to give is the best founders are more and more going to be the young technical founders who are really good at shipping code and really bad at managing large teams. Now, why? I think if you look at the largest outcomes over the last 3 to 4 years, it was mainly built by young technical founders who are really young and whose average org size is not that large. So if you look at companies like Costa, Mercor, and there's a bunch of others, they've scaled from 0 to 100, 300, 500 million in ARR in record times. And they're a team of maybe 10, 15, 20 now. Quite young teams, straight out of university, normally quite technical. I do think the future accrues to those young technical founders, mainly because I just don't think the next Facebook will be built with a company that has 5,000 to 10,000 employees or 50,000. It will just be orders of magnitude less, mainly because of AI, mainly because of the efficiencies that this poses. And so if I were to predict the future very much accrues to young technical teams who can build the best companies and the best products, but who don't have to be good at managing large teams. There's that book, which is called Scaling People by the X-Tribe COO, which is how to scale an org from 500 to 5,000 people. If I had a Polymarket, I would be short managerial skills in that book. At large, I'd be long sort of the young technical founder who's good at shipping code and bad at managing large teams. And so I think as a default, young teams are just at an advantage, not because they want to, just because that's where the value accrues in the market. And so I'm very bullish on these young technical founders.
The second part I think of, from what I understand of beliefs thesis, is that talent is distributed evenly throughout the world, but access to capital and people starting businesses as a result isn't. Could you unpack that for us?
Yeah, for sure. So one of the core tenets is you have to go into sectors where human capital flows are not abundant. What do I mean by this? If you go into SF and you talk to most of the founders there, a lot of them are building AI agents for financial analysis, right? So it's a lot of competition, a lot of the smartest cookies in the valley, a lot of capital deployed, hence returns are going to be compressed. I think a lot of people will lose money there. I think you have to go into sectors where none of the smartest cookies in the valley, where essentially human capital flows are not abundant, are. And what are those sectors? It's sectors that are very large, have high TAMs, low competition to some extent. So if you look at the telco space, who's the smartest person building there? Insurance. Has there been any like large outcomes out of a new insurance provider? Really? Not really. What is the competition there? Not many of the smartest cookies in the valley are working in these sectors. I think those are the sectors where you want to spend most of your time in, because by default, you're competing against incumbents, right? And you're competing against teams where human capital flows are just not as good. So you won't get the best talent building there. Hence, you're going to have higher margins, less competition, and just better returns if you're an investor. So that's one, is like you have to go into sectors where none of the smartest cookies in the valley are sort of like building. And the second one is you have to go where human capital flows are underpriced. What do I mean by this? Again, spoke to a lot of the kids. This is now prototypical to invest into young technical founders out of Stanford, right? Or MIT or whatever the prototypical university is. And you talk to a lot of these founders and they're super young and they're super talented, some of them. But at large, some of them are raising, their first round at 20 pre-product. And some of them are quite entitled, right? Why? Because Jane Street is telling them, here's 400K of total comp, go come work for us. All the VCs are saying, here, take our money, build a company. We want to invest into Stanford graduates. And then the big tech companies are saying, here, again, 500K total comp, come join us right out of university. So by default, it's not their fault. They become quite entitled because you see all of this demand. It's a supply-demand issue where you're just like, okay, I can do all of these things. And so some of them are quite entitled. And I don't think there's much alpha in that game where, again, they're raising their first round at whatever and think they're going to build something great, which, by the way, some of them do. But at large, human capital flows there are quite overpriced. I do think there's huge pockets of talent which are undiscovered, where you have some of the best founders who are massively underpriced. So after speaking to a lot of kids out of Stanford, there have to be underpriced pockets of talent somewhere else. And so I started reaching out to a bunch of like Vanderbilt, like Oxford, Cambridge, Imperial, here where we are in the UK, right? I think a lot of the young technical founders there are massively underpriced, mispriced, don't know how to price themselves. That's where opportunity is. And so that's the second flow, is you have to go into these locations where human capital flows are massively mispriced and underpriced, and that's where I like to spend time.